Welcome to What the FAQ, updates for tax pros. My name is John Sheeley. I'm here today with Fred Stein, CPA EA, as he has corrected us. We have the order of his designations wrong, and Ellie Jones EA, respectively, from California and from Ohio today.
I'm not from there. I just live here.
Oh boy, that sounds really bad.
It is Ohio.
There's nice things about Ohio.
There are handouts available if you're watching us live in the upper right-hand corner. You should see, most of you are chatting, so to the right of chat, you should see Q&A, polls, and handouts. If you click the handouts tab, you should be able to download these slides. If you can't, by all means, email one of the presenters or John at Tax Practice Pro or Nicole at Tax Practice Pro, and we're really good about getting that right out to you after the event. Continuing education certificates will take us about a week for a group this big, so please don't look for them or think they're missing until next Friday. If you're a CPA renewing this month and you need it in a hurry, call or email us. We're happy to try and accommodate you. We use Simple Cert, and you will get an email from Simple Cert with your certificate attached, and you have an option to create it's already there, is to access a portal account which has all the certificates for events that we've ever issued to you. IRS Guidance on the FFCRA and the CARES Act for the week ending 4/17/2020 is the official name of this class. The IRS program number, the CTEC program number are both available, or both appear right there. To earn CE, this is a 50-minute class, although I expect we're going to run over. At 50 minutes, you can leave. To earn your one NASBA or one IRS credit or one CTEC credit, I need you to answer both of the polling questions. 2 questions, you have to answer both. You have to be here for 50 minutes. You have to be paying attention. I can't make any exceptions. NASBA and the IRS don't allow that. So I believe you that you were here, but they don't. So please answer both questions. You don't have to answer them correctly, but we hope that you do. Ellie, you're up?
I am already?
Yeah.
All right, let me have some coffee. Today's objective is to review tax information and guidance that we have as of this morning, April 17th, 2020. We will briefly talk about stimulus checks. If you don't have it already, you're never going to get it. That's the answer. That's a joke, by the way. We're going to talk on office updates, particularly in terms of representation, tax law updates, and the FAQs that came out, and then briefly on the SBA loans. All right. This assumes you have taken a basic CARES education. We won't be going over certain aspects of the CARES, mostly just talking about the news and regulation that has hit the internet waves this week. And it's important to note that everything is fluid. In fact, some of the things that Fred and I spoke about in our webinars 2 weeks ago have changed. So things that we say today is based on guidance and understanding that we have now, and that's always open to reinterpretation. Okay, so stimulus checks. This was a very interesting week for stimulus checks. Many of them began to hit accounts on the 15th. So, there were issues across the board, and I think more issues are starting to come out. We have been hearing from tax pros and in the news that taxpayers have been receiving incorrect amounts. Deceased taxpayers have been receiving amounts. There was a news story this morning that a deceased tax preparer was getting her clients' stimulus checks amounts into her account. And then that there are issues around the refund anticipation loans, aka RAL. And then, as we know, we talked about last week how the Get My Payment portal was going to open. It was supposed to open on the 17th. It opened on Wednesday, the 15th, and it wasn't very easy. So this is what the portal looks like. To click on it, I put the link to it. All of the links in the PDF are active. If you needed to check on the status of your payment, you would hit Get My Payment. And if you were eligible for a payment, but they didn't have your correct direct deposit information, you could update it. As we understand it, many taxpayers and tax preparers are having problems with this portal. That's the news that has been all over social media and news channels this week. And the answer is IRS says that they're working on it.
It's our new reality.
I think this is just my opinion that for an agency that I know doesn't get a lot of money, for them to try to roll this out as quickly as they have, I'm glad that they're trying to roll it out as quickly as they have, but I expected a ton of mistakes. And it sounds like from many tax preparers, just from what I see in our social media and our groups, that a lot of preparers reported that their clients were frustrated with the system. Oops. So one of the big things that hit the news were about refund anticipation loans. What was going to happen for clients who use those? And for those who don't know, that's where you go through a third party like Santa Barbara, Republic Bank. I know H&R Block offers these. John, I think you know a few other ones. They basically take a portion of your refund, and that's used to pay your preparer. And so how RALs do that is they create a virtual account. Here's a virtual account. It's what your refund will go into. Well, after you get your refund, that account number is gone. So where if IRS is relying on direct deposit information to send out these stimulus checks, where is this information going to go? In theory, they're supposed to get a bounce back. That seems to be Linda related. From my understanding, Santa Barbara Tax Preparer Group has said that they are trying to send it back to the IRS. If it gets sent back, a check will be mailed. But some banks reported that some of the amounts did go through. IRS knows what the routing numbers are for these RALs, so they should have programmed their system to recognize it, but they didn't.
Ellie, just two thoughts to this. Or maybe more than two. So the first one is that the IRS and these banks are in constant communication year-round through working groups and other issues because millions of returns go through them. So this could have been avoided. The second thing is in speaking to people that were, I owned block offices, for those of you that don't know that. So back in the all of the 1990s and up till 2003, I had 5 block locations. We did 3,000 RALs a couple of years, and we did it. It was 2000, 2001, whatever that one stimulus year was, and all the banks, the RAL banks, mailed the checks to people. They can do it. And the other thing I want to mention, by the way, they have the data, right? They know who you are. But the other thing that's annoying is that when they got that pre-note 2 days in advance, for a couple $100 million, you think they would have said to the IRS or said to themselves, oh, shoot, we have a problem. And they didn't. And I won't say June's whole name here, but you guys know who I mean when I say June. She feels that it's typical of the banks taking advantage of people. And Ellie, you made the comment, I don't see it on the slide now, that some of these banks may have been even taking a fee to send out the second check.
Yes, some tax preparers noted that some banks were taking out a $35 fee to process it on. The taxpayer advocate, her name is Erin Collins. She started the job early this year. She wrote a really great blog post on this, including certain avenues to explore for stimulus checks. The link is right there. I recommend taking the 15 minutes to read it. One of the questions was about how people with Social Security disability income will get stimulus checks. IRS clarified it in an FAQ they sent out this week that SSDI and SSI will get their checks electronically with whatever method they get those checks. If they get a check, if they get a direct deposit, if it goes on a direct express debit card, they're going to rely on that method. Same for railroad retirement income. However, they stress that if, for example, someone who receives SSDI and therefore has a non-filing obligation and they have a dependent, they need to go onto the non-filers portal and put in their information so that they get the $500 for a dependent under 17. Someone asked for the TAS link. It is on slide 13. You can also download the PDF from the handouts. And we do talk about later about subscribing to the IRS for updates. I recommend also going to the TAS website and getting email updates from their office. So offsets. Again, one of the things that we had said was based on our understanding of the CARES Act, the only thing that the stimulus check could be used to offset is back pay child support. Mm-hmm. Well, that turned out to be wrong because the Bureau of Fiscal Services told banks that they could take the EIPs to pay off private arrears within the bank. Additionally, if a private debt collector, for example, past due credit cards, filed with Treasury offset, the stimulus check could go there. The idea was that it wasn't going to go to things like past due student loan debt, basically public debts. But private debts, it's fair game. I put a link to a Forbes article on this. Right now, Chase Bank came out as of yesterday, and they said, listen, if you owe like a past debt with us, like unpaid credit cards, we're not going to take this money to offset the debt. What we're going to do is we're going to send the money back to IRS, and you will get a check in the mail. Wells Fargo also said they were going to do that. As of now, Citibank, Bank of America, and U.S. Bank have not issued a statement. A couple of things is that states who may have filed with Treasury offset for private state debts, they can also take the stimulus check. It all depends on what the state attorney general would like to do. I know that in my state, in Ohio, David Jost has said we are not going to take the funds to offset any past debt obligations with the state. So you may want to reach out to your state's attorney general to see what they are going to do. And one of the things that TAS has said, if you had worked with a client to file an 8379 for innocent spouse for 2019, that information should already be in the system. So innocent spouse should be recognized for deposits of these checks. If not, right now, TAS is recommending filing an 8379. You, of course, can reach out to TAS and work with them on this. They might just message you back and say, hey, 8379 is your best recourse. But it also shows our clients we've done something. As of right now, there is no provision for clawing back incorrect amounts. So I believe I saw a couple people posting that their clients had gotten like 3 stimulus checks amounts, and one was based on 18 and one was based on 19. So at this point, we'll just have to report it on a 2020 return. One of the things Nina Olson said in her blog post about this, and this was in our presentation last week, is that deceased taxpayers got this and the government became angry because they were like, well, why did this happen? And Nina was like, because we didn't have time. We didn't have a way to verify this information. We were relying on older information. The commissioner backed that up too. I think that again is the same thing. The IRS had to rush to do this. And I believe in 2008, they took several months to get out the checks, John.
They did. It was all summer checks.
Now they're doing it in 2 weeks.
Mm-hmm.
So what I do want to say, though, is that nothing with tax law is immutable. We had thought that NOLs were changing, and it turns out they're changing again. So I mean, Congress could decide like, hey, if you got incorrect money, we want to get it back. So nothing is immutable. Anything can change.
So I take a lot of CE. I listen to a lot of CE, and I listen to a lot of podcasts. So Roger Nemeth, friend of all of us. I feel like I'm in The Sopranos when I say a friend of ours, right? But Roger's a great guy, tax help software. He does a lot of free continuing education as well through ASTPS. And Roger was saying that he believes there's going to be some sort of date that's going to come out where this is the date, and if you were deceased before this date, you're going to keep the check. If you are deceased after this date, they may claw it back. They would go to the bank where the money was deposited, and they would try and get it back. And then someone else who was on the webinar said, well, by the way, who do we think is cashing these decedent checks, right? The check is made out to the decedent. Hopefully it's the estate.
One of the things that TAS put on their website and IRS put on their website was that if your client has moved, as of right now, since IRS isn't taking mail, they can't process the 8822. Is that correct form number for moving? No. They can't process those requests. So make sure your post office is forwarding your mail. At this point, they're saying for checks, rely on the post office to forward it. And that takes us to the status of IRS operations as of today, and that turns it over to John, 8828. Thank you, Sandra.
I'm not prepared. Wow. All right.
I can start talking, and then you can jump in.
No.
You just talk the whole time, please, instead.
I can always talk, right? So I think, by the way, I want to give Ellie credit for all these graphics because I'm a type the text onto the slide kind of guy, and I'm lucky if the spell check was done. Forget about any type of picturing and font or whatever else. And Ellie has done a great job. So thank you, Ellie.
Thanks.
Assume that it's not open, right? Nothing at the IRS is opening. We've been through this. Don't fax them anything. Don't mail them anything. There's plenty of literature out there that we've addressed where basically they're just not there to answer the mail. Now, you should be mailing, if you have 941s that are not e-filed, there is a new address for paper 941s. I guess that's the one box they're going to check. No paper returns are being processed. They don't have the capacity. We mentioned this the other day, they even extended the ability to file a 2016 return until July, and get the refund, which is absolutely amazing. So Taxpayer Advocate Service is still open, but not if you call the national number. You need to call the local offices. You're going to get voicemail, a general voicemail box. You should say that they're going to give you a 3-day turnaround as their goal. I don't know that they're hitting that yet. They're as backed up as ever, and it's even worse now when you consider that TAS generally is an intermediary. They don't do things themselves. They can recommend it. So TAS is calling this, saying, okay, there's a mistake here or a problem. They're calling this IRS department, this particular IRS employee. Those folks aren't there right now, so it's hard. But if there are issues involving economic hardship, say so when you call this in, and that might get you moved up a bit in the pile, is our thinking. There is a web page that has IRS mission critical functions, and it is updated. So we have that at the bottom of the screen here, and if you do click through to that link, I wish they would put it at the top, but in the lower left, it tells you the last day the page was updated, so you do know if you're looking at current information or not. Lori, I would call again. Squeaky wheel gets the cheese or whatever. So IRS Notice 2020-23 clarified the July 15th due date. The big thing that's new here, and correct me if I'm wrong, is the Form 990 itself was not specifically mentioned in the last release. And since the 990 was an information reporting form, we didn't think that it had been extended. And it now is officially due July 15th. It's included in that information, as is the 990N, which is that online postcard, which lets a small entity keep its tax-exempt status.
And just a reminder that revenue officers are working from home.
Correct. Yeah. So a lot of this things that we're telling you that affect an RO should not be ignored. And of course, I've got my eyesight. You folks don't realize this, but I'm seeing all 3 pictures and the slide's very small, so I have to roll back. And so this is the mailing address form for Form 941. These are the new addresses. Ellie, this came out of the form instructions, right?
Yeah, it came from the FAQs that I was working with yesterday.
Okay, so make sure if you're going to mail it in, you have this. Angela, email one of us. We'll happily send you another set, no problem. If anyone, if you can't get the handouts to open, it is in the handout section. If you can't see it or you can't get it to download, by all means, email us and we will take care of it. Someone will get it set to you. So security. IRS Security Summit reminds us that phishing is up. Phishing is when I send an email that's meant to be a friendly email to try and get your stuff. It's terrible. When you work from home, you should be using a VPN. If you don't know what a VPN is, you have a problem. That is a virtual private network. It creates a secure connection between your computer and wherever you're going. You should remind all of your clients who call that the IRS will never call and ask for any information by phone, especially a bank account or other information related to a stimulus check. If you're working remotely, you should be using multi-factor authentication if you can. That's like the IRS website where you get a code sent to your phone, or you're using the Google Authenticator application, which gives you that secure code to use to log in. We've been using it. It's a real pain for connecting to the server, but it works. We're also using it. Drake has that availability. So if you walk away for 15 minutes from Drake, it wants you to re-enter a security code from your phone. You know what the problem I have with that, Fred, is? With having to rely on my phone?
You don't have it all the time.
I got to keep it charged. Yeah.
Mine gets taken by my child to
You
play.
know, you have a USB port that you can just put a charge cord in and have it right with you.
Yeah, but they tell you that's bad, right? To leave it constantly charged. You're supposed to let it actually run down.
You replace your phone every couple of years.
I don't have that kind of cash, but that's a good point. Okay, Treasury Inspector General for Tax Administration is opening up a department to work on phishing and phishing-related issues within the service. That's going to be very interesting. Their reports are always interesting to me. If you are a victim, not a victim, if you have any phishing attempts at all, you should forward the emails to phishing@irs.gov. They do look at these things. If you think you're a victim of a phishing attempt, I'd like to remind you that you are, in fact, that's a data breach or a potential data breach, and there are specific procedures you need to follow with turning it into the IRS, your state, and possibly your insurance carriers. So please. Also, if you're working from home, you should all have cybersecurity anyway. Your ordinary insurance, your E&O insurance don't cover you. You should have cyber. I have cyber. It costs more than my other two insurance policies combined, but you should look into cyber. I'm just going to say the biggest expense if you have a breach or an alleged data breach is compiling the list of people that may be affected and notifying them as per state and federal law. If you've got 10 years worth of data on your laptop, and it's beyond even your clients, it's your dependents, the partners in a partnership, the people on a W-2, people that aren't your clients anymore, anybody on that computer that could possibly have been affected, you need to notify, and that's the expensive part, building that list.
Gene, a lot of E&O insurance companies offer cyber as an add-on.
Yes, I didn't see that question. Oh, there we go. If not, we can, email us. We can happily put you in touch with some companies. There are companies out there who are specific to the accounting and tax professionals, and that might be a good idea.
And if you're a member of any organization like NATP or NAEA, they also have people they can refer you to.
I recommend going through an affinity program and somebody that works with those folks. So. Okay, so IRS Operations for representation. Everything is closed. Ogden was, there's a news release out there. Ogden was closed for 2 weeks through the 20th, but I haven't seen where they're reopening. So there are limits where IRS employees can accept some signed documents. So don't think that you're going to run out and have your clients e-sign 8821s and 2848s. They have to be case-specific documents. They have to be agreed upon with the particular revenue officer you're working with. And primarily, they're allowing you to digitally sign. That there's not been a polling question yet, kids. They're primarily looking to close documents, close up cases. So in that limited case, there's also a statement you need to attach to it. If you're in this situation, email one of us. We'll get you out the, there's a whole big list of things. Oh, Ellie, I love you. Here's the information of what you need to attach. I'm not going to read it to you and waste time, but basically these are the IRS types of cases we might want to close. Yeah, Jeff, that's correct. Roger did mention the other day that they might allow 8821s or 2848s to be filed with tax returns, which will be a very interesting thing, and it makes sense. So earlier this week, there's a pronouncement that the PTIN fee is going to be $21 next year, plus a $14.95 processing fee. Now, if you remember, when they went through the Court of Appeals, this is allowed. Now, the $14.95 is going to go to a third-party company. I think it's going to be related to the background check. Public comment is open. I want to remind you, if you watch Schoolhouse Rock, how a bill becomes a law, one of the things that they forget to talk to you about is public comment. So when this proposed agency action is out there, there's a 30-day period in which stakeholders and affected people, that's us, can apply, can reply, can get our comments in the record, and you can even email in your comments. So the second handout here is a copy of this from the Federal Register. It has the information for you to comment. If you think this is a bad idea, you think there's problems, by all means, you should get your opinion heard. That's something that we as practitioners often don't do. Fred, I know you don't like the softballs. In 2015, what law did you think was stupid?
All of them.
No, it had to do with
I don't like laws.
The 3115.
The Stein Reed doctrine. Absolutely.
Yeah, and the original. So originally, how much money were we going to be allowed? How much were we going to be allowed to write off? as an expense. Do you remember?
No.
$500.
Oh, we're talking 500, 2,500. Yes.
Yeah, right. So the accounting and tax prep industry wrote in and said, thank God you guys are finally doing this, but $500 isn't enough. And we convinced them just from public comment to do what? Raise it to $2,500. So yeah. Oh, Henry says it was even $250. Maybe he was right. But we got it to $2,500. So if you think you've got valid information, by all means, you want to get this on the record. Okay. So I think this is now what, Fred?
Yeah, everyone complaining that Fred isn't talking. Now you get your wish.
Nobody's complaining that. Nobody wants to hear me speak. All right. NOLs. We're going to talk about the lovely net operating losses here. All right. The primer. NOLs have been changed a number of times in the past couple of years. And who knows? It may change tomorrow. We have no idea what's going to happen with the next CARES Act and all this other fun stuff. Prior to the Tax Cut and Jobs Act, you were able to carry back 2 years and go forward 20 years. In certain other situations, it could be more and such like that with farmers and whatnot. When we carried it forward, we were able to offset 100% of taxable income. Then along comes the Tax Cut and Job Act and the lovely tax year of 2018. We thought nothing could beat that, or as crazy as that. And now we have 2019. So post Tax Cut and Jobs Act, we cannot carry NOLs backwards. They all go forward. And we have that lovely 80% offset of income. And calculating all that stuff, at least for New York, had a very interesting calculation when that first came out. Spent hours trying to understand that, and I still don't think I understand it completely. So these are for tax years beginning after December 31st, 2017. All right, so now we're going to go to what is happening now. All right, Congress cares about the net operating losses. Hey, Ellie's back. How you doing, Ellie? For tax years beginning after December 31st, 2017, but before January 1st of 2021, and it's not January 31st, January 1 of 2021, we can now carry back losses for up to 5 years. All right. As a result, if we have an NOL in 2018 or 2019 and 2020, the NOL is to offset pre-2018 income or capital gains. All right. No election is required to carry back the loss. You elect to carry it forward. I believe that was the case prior to this as well. All right. CARES adjusted the effective date provision to help businesses whose NOLs straddle December 31st, 2017 due to their tax year. They get a 2-year carryback or a 20-year carry forward. All right. You have up to 120 days after March 27th to file the election for the carryback or to elect to forego the carryback. All right. This is what we want to know. The options that are addressed. You can carry back 18 and 19 back to 2013 and 2014 to recoup prior taxes. You get your money now as opposed to waiting for it in the future. Key planning opportunity here. All right. You wish to evaluate all of your 18 and 19 clients who had NOLs, and then you need to look back and see where this is going to apply and whether it's going to benefit them. If you can't do that, then we may want to look at opting out of the carryback and bringing it forward. Make sure, and this is the most important part, that if you're going to do an evaluation with a client, look at their stuff and then talk to them and make this a planning opportunity where you get paid. All right. Don't be going through all this stuff for free. And now you've got the answer in your head and you have a 3-minute conversation with your client. Say, yeah, we can do this and it saves you that. Get paid to do this.
Henry Grabowski makes a good point that some states decoupled from Fed with respect to NOLs. So if you made a state election to waive carryback, you may be stuck.
Thank you, Henry.
And some states are even worse, Henry, because New York and New York City, in addition to decoupling, they rewrote the law for 2015 and forward, where we now have, God, we're going to have 3 buckets, right? We have pre-2015 or 2015 and prior, post-2015, and now possibly these new ones. It's going to be amazing.
Oh, yeah. But the software is going to do it all for us, so we don't have to worry about understanding anything, right, John?
My, you know what? The software may do a lot of the calculations, but it's not going to do the logic. The software can't sit there and say to the client, you know, have you considered, sir, I can file today and put $5,000 in your pocket within 90 days, or we can carry this forward for 2 or 3 years, assuming your business survives. And, you know, that's the conversations. That's where we add value above software. I'll get off the box now.
No, keep staying on the box. We like that. If you want the, you know, if you want it, you should go read the IRS Notice 2020-24 and read their FAQs. All of this is great information. The FAQs are pretty much plain English writings, which is good. But you always, as we always will tell you, go back to the actual laws and the notices themselves.
Hey, Fred, I've got almost 400 people on this webinar, so I need everybody's help. I'm trying to get Kathy Morgan to do 3 webinars with me on NOLs, the old basics, what the current rules are, and then planning. So I think she would do a great job. We'll go through all of this, and we would do this sooner than later. So those of you that know Kathy, you should tell her you would attend. Send her an email or Facebook message her.
As long as she's done with all her work, she's absolutely allowed to do that.
Okay.
All right. In order to do the carry forward, you must make an election, and it must be made by the due date, of course, including extensions for filing the return. Remember, the carry forward now allows you to take 100% of those losses regardless of income. The 80% is gone for now. Prior NOLs that were limited to 80% of income, they need to review your options to see if an amendment is beneficial. So we're going to have various different ways to do things. We've got the 1045, the 1139, and an amendment that we're going to be looking at.
So the CARES Act was really the Tax Prepare Work Act of 2020?
I thought that was the Tax Cut and Jobs Act.
Intuit lobbies very hard, apparently. But shut.
Looking for that postcard to file. All right. Checkbox in the software, it's going to be there. I believe every single software will have that you can check it, and it's going to put down pursuant to Rev Proc 2020-24. And hopefully we're not going to have to remember all this stuff because we're just going to ask John and he's going to give us the answer.
You know, the big thing is on these e-filed returns is not so much does a print on the top of the return, but is it in the data stream? And we don't have enough time today, but I've got a great story about Frank Agostino and a FOIA request with a data stream. But anyway.
You would think it should be in there. We're going to hope it is.
Yep.
So, all of this stuff, everything we're talking about, when all these changes and everything that changes a prior year or changes how the future year looks, presents a planning opportunity to you. You want to use this to evaluate your clients, see if you can data mine your software and put your clients into the various buckets, and then put together planning opportunities for them. The easiest way to make more money is to utilize your current client list.
We have to charge for this?
Well, you know, you can be a nonprofit if you want. You know, I have to talk to a lot of my preparers about how we don't want to discount as much as we discount that they should pay.
Got it.
Basically, you can look at the short term and the long term, what they're doing now. And you don't want to just look at what you can get them from the past. You also need to look to the future and where they expect to be, because if their tax rate is lower in the past, you may want to forgo that money because they're in a higher income bracket going forward. Thank you, Henry. I agree. All right, carry it back. We mentioned the Form 1045, Form 1139 is for corporations. You want to file it before July 27th, 2020. All right. For these forms, they are usually due within 12 months after your year end. All right. So if you filed a 2018 return, the end December 31, 2019 was the deadline for these forms. The IRS recognized this, or Congress recognized it, and they gave us a 6-month extension. So for the 2018 ones and for returns ending before June 30th, 2019, we have until June 30th of 2020 to do the carryback claim. If you do not meet this deadline, you don't lose the money. You just takes longer to get it back, you need to file an amended return.
Now, let me emphasize, that's the 2018 return.
Correct.
Right. Yeah. Now, to Fred's comment about paper, remember, the IRS isn't taking paper right now. So you're going to learn in a minute, though, they are going to be open for processing these things, not the amended returns, but the NOL claims. So pay attention in just a minute here. But that July 27th deadline is for going back on the 2018 and electing to carry it back.
Could you answer Henry's question about the effect on statute of limitations with these?
Well, remember, it doesn't. So if I go back to 2013, I am only creating an issue with respect to that money. The issue, Henry, is I'm only affecting the loss year. So if I take a 2018 loss and carry it back to 2013 or whatever the first year is, in fact, I don't open 2013 at all. It's just, the year that I generated the loss has a statute of limitations to run. So in theory, sure, if the loss year is examined and it's found that my loss was bigger than it should have been, I could have to pay back some money. But that would be related only to the loss year. You're not opening the statute of limitations to the carryback year.
Correct. All right. So as we found out, we have basically 3 buckets of NOLs that we're going to have. All right. We have NOLs that were beginning on or before December 31st, 2017. And you can see how they're eligible: 2 years carry back, 20 years carry forward. 100% of taxable income can be offset. Beginning after December 31st, 2017 and before January 1 of 2020, all right, 5-year carryback, indefinite carry forward. But we drop back to the 80% of taxable income after 2020. So after January 1 of 2021, this all fades away and we go back to no carryback, automatic carry forward, indefinite carry forward, and back to the 80%. How to claim. We cannot mail things in, as we've said repeatedly today, so we have a fax that we can do. All right. These are refund eligible. They must be faxed to 844-249-6237 beginning today. You are limited to 100 pages. So for those more complicated ones that need more than 100 pages, you might have some issues. This is, again, temporary, and I imagine that once the IRS opens up fully for business again, we're going to have more changes. In fact, we're probably going to have more changes come Monday. All right. You can
let me ask my polling question, Fred, because they're all getting nervous. And
okay.
we're a little bit behind. So up is the polling question. I just want to remind you that the IRS and NASBA want us to ask reinforced questions that reinforce the learning. So one of the problems is if I guess the wrong spot when we're doing the question, you end up getting it later than you would have thought. IRS temporary procedures related to the filing of NOL claims requires, starting April 17th, yet there's a fax number. Until further notice, NOL claims are mailed to a new address. Until further notice, you don't file NOL claims. The IRS will issue guidance after July 15th, 2020. You don't need to get these right. We hope that you do. And the idea here is that it's testing your attentiveness, that you're here and awake as we do this. You do need to answer both polling questions to get full credit.
I just posted to the top of the chat Kathy Morgan's very astute comment that if you want to use the fax number, that is only for the 1139 or the 1045.
Correct.
If you want to use a 1040X, you got to mail it.
I just want to say one thing about using the 1040X, and that is that if you haven't thought about this, 1040X is 6 months on a good day these days. So can you imagine now, after coming back after 3 months or however long the IRS is going to be closed, it's going to be worse than any shutdown they've ever had. And it's because they had no preparation for this either. I think it's going to be a year that we're still going to be seeing straggler problems. And while that's one thing good for money, it's got to be stressful on taxpayers and things. So I would be avoiding whatever I could anytime filing an amended return.
Well, they say they're not even caught up from the last shutdown that was planned. So this is going to be much worse than that. Okay, so I want to close up my poll if that's okay.
A bunch of you have not replied. Last chance here on the polls. Maybe we offended a bunch of people and they left, Fred.
Makes it easier.
No, there's still about 30 of you that haven't replied. Going once.
They're getting coffee.
I know. Well, it's been up for a bit. Going twice. I feel bad. There's 20 of you that haven't answered. 19. And down goes the poll. All right. So if some of you have other plans, in 8 minutes, I'll announce when we've run the 50 minutes. And if you have to go, we understand you can watch the balance on the replay. But we do hope that you'll stay. And I apologize for having this much information to give you. Go ahead, Fred.
Okay. So we know we need to fax to the 844 number. Again, as Kathy pointed out, do not fax amendments there. This is strictly for the 1045s and the 1139s. All right. Gordon Gecko, and points for anybody who knows who Gordon Gecko is. If you don't know them, you need to know him.
Michael Douglas.
I honestly Googled this because
Oh, good Lord. Famous line, greed is good. All right. Gordon has 2018 taxable income of $45,000. Not the Gordon Gecko we know. He has a 2019 NOL of $25,000. He can elect to carry back the entire loss. He's going to use the Form 1045 to carry back that loss. He's going to fax that to the 844 number because he's smart, or his tax pro is. I love the next wording, should be processed within 90 days. Can't imagine that's going to happen, but it says it should be.
John made me look up the actual site for that. So it's not just IRS saying it. It's in the law, but as we all know right now.
Well, you remember, what can you do if the IRS doesn't take care of something in a time frame that they are supposed to? Where do you go?
Taxpayer advocate?
Yeah, taxpayer advocate. If you get past 90 days, you can't get an answer, you go to TAS.
You're so smart.
I don't know about that, but I'm just, sometimes I feel like Captain Obvious, but other times, I think it's important just to tie it back for people, right? And say, hey, but then you're going to go do this. So.
And I am done.
So payroll tax deferral, IRS released some information on this this week. The employer portion of the Social Security tax and certain railroad retirement taxes are deferred. The deferment starts on deposits made March 27th, 2020. So if that means you had a deposit that you needed to pay on March 27th when CARES was signed, you can start deferring the employer side of your SS tax. Right now, IRS says there's no guidance on the first few days. File your 941 on time, make your deposits on time. The 941 will be revised for the second quarter. So I know we're going to have fun with that. Talking about the Paycheck Protection Program. Again, 2 weeks ago, as far as we understood, if you got PPP, you couldn't defer your ER taxes. But SBA and IRS came out this week and said, actually, even if you have the loan, you can defer your payroll taxes until you receive notification on forgiveness. So if you got the loan.
Ellie, is that notice on forgiveness or notification that you have the loan?
Notification of forgiveness.
Ooh, that's a big difference.
Yes. So if you received the loan April 15th, it goes 8 weeks. That'll take you to June 15th. You are forgiven on June. If you get, let's say the bank goes really fast, you get your forgiveness notice on June 30th. You got to stop deferring taxes that day, June 30th. And I did not see, if it says notification, are you going to be notified by email or mail? If it's mail, is it the day that you receive it or the day that's on the notice? So self-employed taxpayers are eligible to defer 50% of their Social Security tax. So we know that SC tax is both Social Security and Medicare, so they got to do the math. Your payments are due 50% of the deferred amount is December 31st of next year, and then the remaining 50% is December 31st, 2022. There is no failure to pay penalty on the 50% that is due. So if you defer that payment, and you've got like $1,000 hanging out and you're going to pay it by December 31st, 2021, there's not a failure to pay penalty on that. There are failure to file penalties still, so your 941s need to go out. IRS sent this out today, this week, and Tony Nitti actually wrote a really great article on it. I linked to it there. He put some excellent examples on how to think about using the payroll deferral tax and the employee retention credit for a client's maximum advantage. You won't get penalized for failure deposit penalties, which is really good. So if you think you're going to get your employee retention credit and you say, oh, I'm going to get $10,000 on this credit, I'm not going to deposit this $10K based on notice 2020-22, you shouldn't get a penalty based on that. And again, that link is active. So if you click on that, you'll get to read Nitty's breakdown of the new FAQ. And he has, like I said, some really great examples. You can apply them to your clients potentially. I have an example here. Acme Inc., whose biggest customer is Wile E. Coyote and who is not at home. He's still out there because, the desert's pretty open. They have $5,000 in family and sick leave credits and $15,000 in employee retention credits. They still got to work. They still got to produce all their stuff. Normally, Acme would pay $10,000 in FIT, ER, and EE shares of FICA taxes. I just made up some of these numbers. IRS in the FAQ says that Acme can defer the ER portion of the SS taxes until 2021 and 2022. But because they should get the employee retention credit, they can delay depositing the taxes they hold for the EE FICA and the federal income tax withholding. That means more money in the pocket, and you cannot exceed your anticipated credit. So if you think your credit's only going to be $10,000, you can't withhold $11,000. And that's, of course, more money for your payroll processor because they are going to have to do that math for you. And now we're back to the very lovely Fred Stein.
What? Oh.
So,
okay.
Hey, before you start, let me see what the other polling question when I typed was. I'm getting old. It's a paycheck protection loan question. So, let's see if you get there first, Fred, because we're probably 3 minutes away from them having 50 minutes. So go ahead.
Okay. Let's talk about the loans, the lovely loans. EIDL or idle loan, because you are sitting idle. All right, we've got, and I'm pretty sure everybody already knows this, the rumors look like it became truth where the idle grant was limited to 1,000 per employee. So if you had less than 10 employees, you didn't get the full 10,000. You got as many employees as you have. Social media, the great news releaser of all things. 1,000 for both the self-employed person, and then any employees they have would be an additional 1,000 per each. And if we don't know this yet, both the idle applications have been halted and the PPP loan applications have been halted. We have a lapse in appropriations, unable to accept. All right. People were scrambling yesterday and getting the banks letters saying they have no more funds, while others got lucky and they got their funding. And I don't know what it means if you have not heard from your bank. If you have an application, I don't know whether that means you're still in the queue because your money's reserved or not. Kind of hoping that for some of the clients. All right. Self-employed people, Schedule C's. The income line you use is line 31. And when you apply for the PPP loan, if we're allowed to apply, when and if we get a new wave of funding, you're going to use line 31. You're going to divide that by 12. Then you multiply that by 2.5. And that's your self-employed wages. And again, if line 31 is over 100,000, you limit it to 100,000. So that is your self-employed wages for you. And then you would utilize the normal methodology for calculating any wages on employees. It is our belief, some people may have read it differently, but it is our belief that the 8829 expenses are not included in the forgiveness calculation. We may get more clarification on this, maybe not. It is my understanding that on the forgiveness portion for self-employed individuals, let's pretend we have no employees. We got our 2.5 calculation we use, using your 2019 Schedule C again, they're going to then divide line 31 by 52, multiply that by 8, and that is your 8 weeks of wages paid. So you don't have to wait till 2020 to file your Schedule C. It's both the loan amount and the forgiveness amount for the self-employed owner's wages are both based on the 2019 Schedule C. In addition to that, so the self-employed person with no employees, we know what the forgiveness amount is and we know what the loan amount is. So the difference between that, you can offset other expenses such as mortgage interest, business rent, or business utilities. This says to us that you have a separate place of business and you're not working out of your home. And the new regs are right there in the bit.ly link.
So is the next slide talk about how they end up with a loan?
How what?
Then
The next slide is the Olivia Pope example.
got it. Okay, yep, got it.
And points for anybody who knows what show that is from.
Oops.
Olivia Pope?
Yeah, I know you know.
That's Number Queen.
No.
No.
No, that's not Miss Henley. She would be a good Olivia Pope, though. Okay, so Olivia works as home as a consultant, and she applies for the PPP loan. Based on line 31, her net for 2019 was $90,000. All right, Ellie's math says she's going to get $18,750. $5,000 deduction on $88.29. You use the proceeds to pay, but it's not forgivable.
And that's on page 9 of the new regulations.
So, 8 weeks. Did they use Olivia Pope in the example?
They did not. They just
Okay.
used their legalese.
They used X and Y.
So 8 weeks of net payroll, as seen as a calculation, 8 weeks equals 13,848. Of that 18,000 is forgivable already. The balance payable over 18 months with 1%. And the first 6 months is interest free, correct, John?
Yep. So let's get this straight. If I apply for as we read the regs right now, if I apply for the maximum amount of a Paycheck Protection Program loan as a sole proprietor, and I take the maximum amount, I can't get full forgiveness. I am going to end up with at least a little bit that is not forgiven.
As
Correct.
we understand it, because the exact language they use is that if they forgave all of it, it would be a windfall.
Windfall was the exact word. I loved it. So the stupidity of this is we're going to loan you basically 10 weeks of payroll of last year's net, but even if you do your best, only 8 weeks of it is forgiven.
Mm-hmm. And if they do have an outside office, which many sole proprietors do, then you will be able to get some of the remainder of it forgiven as well.
And that was the point where they said the people that work at home, which is why we think also the 8829 expenses don't count. They said it would amount to a windfall for people with little expenses that worked from home.
Correct.
One of the things that they said too is that you need to already have the expenses in pay. So if you started and reported on your 2019, so if you started renting an office like February 1st of this year, you're not going to be able to use that rent.
So,
I mean, you can take your money and continue paying your office rent, but it's not going to count towards your forgivable amount.
So file this under too much information before everybody gets grumpy. You know, I've got debt at greater than 1% right now. So 18 months at 1% gets me 2 more tax seasons. I can live with that at 1%.
exactly.
Just saying.
This is nothing anybody should be complaining about. You're getting virtually free money.
Well, once inflation gets factored in, it is free money, right? Negative 2%. Let me put up the polling question real quick, which we haven't even gotten to it yet, but I want people to be able to get out of here. So if you can get this correct, it's a real bonus. The most recent SBA guidance related to Paycheck Protection Program loans states that partners and partnerships should each apply for a loan, should include their income in the partnership's loan, can choose whether to apply as partners or as a partnership. Partners are not eligible for PPP loans. You don't need to get this right. You do need to answer it so that we can award you credit for being attentive. I'm asking it now because we're just at about 50 minutes of education, and those of you that have to go, I want you to go, but we've got about 10 more minutes of material, I think.
And once that poll question is done, because somebody asked about partners and partnerships, I'm going to go over how that works for them immediately after the poll is done.
They're answering much more quickly this time. I guess they all want to leave.
Some people have reported that they were able to submit their 2018 Schedule Cs to use for this loan. I believe that is a bank-specific incident. I believe as it was written, they wanted you to use your 2019 income.
Yes, it's not clear how much flexibility they really have, especially once the reg comes out and it said your 2019 Schedule C. It didn't say, or it didn't even say, and if you haven't filed, a copy of your extension and a copy of your profit and loss. It said your 2019 Schedule C.
And they were taking drafts before even filings. And I know Leah was working feverishly on the 15th to finish some bookkeeping for a client so they can submit their Schedule C because they needed it now.
14 of you haven't replied, but I'm going to close this in just a second.
Kathy wanted me to tell everybody that the 2016 RSED refund statute date was extended.
Right.
There's been a lot of questions out there, so 2016 has some time.
We did mention that earlier today. We did say that 2016 returns have until July 15th.
They were asking about amended returns too as well, though.
Oh, everything.
So.
Okay, so I'm going to close this up, folks. All right, so I'm not going to go over the answer because the answer is that
I'm going to go over the answer.
The current guidance is the partnership is supposed to apply, and we were unsure prior to this week. But go ahead, Fred.
Okay, and Ellie, there are no partnership slides, correct? I can just talk about them.
There's a partnership slide. It's
okay. There you go. I wasn't
this
sure.
What happens when you don't look at the
I did, but I forgot, short-term memory.
Wait. We've had 3 different versions of the slide since 8 o'clock last night, so I don't want to hear that. Go ahead.
Yeah. Thank you, John. All right. So partners don't submit by themselves. The partnership submits for the PPP loan. All right. So previous thought process before we got guidance was that only the guaranteed payments were what going to be used as payroll for as many partners you have. Naturally, the actual payroll portion is going to be the same standard way it always has. So we're talking strictly how the partners' calculations are factored in. So what this means for the partnership is only those guaranteed payments, which are subject to SE tax, and then the income distributable to the partners that is subject to SE tax. So if you have a limited partner that's not paying SE tax, that does not go into the calculation. All right. So the main thing to know is you file at the partnership level, you do not file at the partner level, and then everything else is exactly the same as with the regular ones. They are out of funds, so the nearly can be removed from this. They are not taking any more applications. Hopefully, everybody who needs to have got their reserve spot in line. I know I am not. They tell me I'm going to be in line where I am if more money comes in. I'm not going to put any weight on that, as I imagine there's going to be some changes, and the bank's going to tell me, well, no, we need this information now. You need to update the time period you did your payroll for. And it's probably going to kick me back to whenever I reapply again. I'm going to hope I'm in line. I'm not counting on it. All right. A lot of us are saying that many of the small businesses that really need this haven't gotten it. We do have a number of people that reported their clients did get the money. A lot of people were saying wait in the beginning. A lot of people were rushing and head first in. I guess the rush head first in people won the battle this year. The average loan size is $239,000. So we have a lot of people we know that are getting $12,000 loans, $40,000 loans, which this means that there's a lot more loans larger than $239,000 as well.
How about a $20 million loan for your restaurant?
Oh, there was a lot of talk on social media about that. and arguing with certain people who might be attending here about whether these guys are going to find a way to do stock buybacks or not, that they're not allowed to do.
If people really want a webinar on the employee retention credit, Fred, would you be willing to come on and talk about that?
I'd love to talk. That's what I do.
The big thing, Ellie, is we didn't have enough guidance yet really to work it through, because what we wanted to do was a Schedule C comparison of, you know, I'm a small guy with a couple employees. How do these different options work? And you know, so it's a maybe.
All right. 41% of small businesses are seeing revenue declines of 50% or more. That is tremendously not good. And that's going to go more as this continues. All right. We are going to see a lot of small businesses going out of business because of this. All right. It's kind of the opposite of, you know, 2008 with the housing market when everybody got fired and they all started businesses. Well, a lot of people are going to be going out of business, and what happens when it's all done, it all remains to be seen.
I want to insert one thing. If anybody needs to go because they're over, you've met the time requirement if you've been on since the beginning and answered both questions.
So Congress is debating more funds to the loan programs. And you know, I'm pretty sure we all know, we're probably 99-100% sure that we will have more money out there. When and how much it is, whether it's going to be that 250 billion, 390 billion, whatever the number is going to be, there will be more money put out there. They pretty much have to. Lots of unknowns right now. Everything, it's changing. We probably had changes while we were here chatting. If you don't subscribe and follow Tony Nitty, follow him, follow Tax Girl, totally follow the three of us. We're excellent follows, and we'll give you breaking news. I love Tony Nitty's last comment on his article. It's basically, we don't know what the hell's going on right now. Right. Be sure to subscribe to your state's Department of Taxation's email list. All of that stuff you should be getting. Flood your inbox with lots of junk emails and read it all, because it's good stuff.
And TAS. Subscribe to the Taxpayer Advocate.
All right. Coming up on Monday, April 20th, a lot of people are going out of business. A lot of tax preparers are going to be looking to get out of this business. They don't want to deal with the 2020 tax season. They don't want to go through this again. A lot of people are going to be selling. All right. If you're one that's looking to be buying, we have another webinar come Monday that Ellie's going to put a whole bunch of slides together for over the weekend for us.
Slides, really?
Although other than that, it's just me and you talking. So
the price on this program just is still $9 through today, but I think at midnight I'm going to boost the price up. So you know, for all the late bloomers out there. So those of you that are on here, you still have the benefit of getting this for $9 if you do this today. All right. Anybody else that's got to go can go, but questions. So if you have a question we didn't answer recently, pop it up in the Q&A or in the chat.
We got no questions coming.
EA credit is not allowed for Monday because it's not a federal tax law update.
True.
No, it can EA credit's only for tax programs.
And Diane, we will look to put together a retention credit one. The three of us will talk after this is over, and we will see what sort of time frame we're looking at.
I'm going to put the link for Monday's webinar in the chat because people are saying the other one isn't looking. So there you go.
Do Roth IRAs count as CBDs for the 3-year repayment and penalty exception? Well, Glenn, they probably do, but most Roths won't have a tax bill. You know, so sure, and they do count for the penalty exception.
Kathy wants to know about the 1120H. Basically, if something was due on April 15th, it was extended. So I believe the 1120Hs are due on April 15th.
Probably. So a couple of people are asking, how are we going to know if this changes or that changes? Everyone's email box is getting inundated, and I admit we're part of that problem too. But if some of this stuff changes, something like that, we'll probably put out an email immediately that just said to everybody that just the subject line will be SBA releases X dollars, and you can go off and work on that.
Yes.
Also, go to our Facebook group, COVID-19 Best Practices for Tax Pros, Tax Offices. That gets updated with things all the time, not just by us, but the other members who share their time and information.
Timothy Mansour wants to know whether it's worth it to have clients apply right now for PPP. I don't think the banks are even accepting applications until a new wave of funding. So we're going to have to wait.
They can't guarantee the loans, so I don't think they're taking. And quite honestly, they don't want to be doing them anyway. There's a question. Are we recommending that sole proprietors incorporate if they miss the payroll protection loan to take advantage of the retention credit? I think the problem is you had to be in business on February 20th or March 27th.
Correct.
Right.
But self-employed people can take the credit as well.
The retention credit for themselves?
I'm sorry. Not the retention credit. I got to double check that.
They can get the deferral, but
yes.
But they can't get the retention credit. But Jeff, I think there's a problem with that, and I'll think about it. If you think of it, email me. But I thought there's a problem. No ex post facto, right? You're not going to go back and change the world.
Correct.
To pick up some of this stuff, but maybe I'm wrong. But I seem to remember reading that somewhere in these gazillion pages. Are you guys looking in the Q&A tab?
No, we're looking at the chat. Should we be in Q&A?
Yeah, there's about 10.
But a partnership or S corporation who did not file their extension by March 15th, in trouble. Need to get the return in as quickly as possible.
I would e-file it as soon as I could. The big driver there is that most partnerships, that if you have 10 or less partners, there's something called Revenue Procedure 84-35, and that is your friend. Basically, if it's a small partnership, 10 or less partners, and they report the income on their timely filed personal returns, timely file can include an extension, you pretty much can get automatic abatement of the failure to file on time penalty. The IRS also indicated when they didn't grant any relief, automatic relief for March 15th this year, they said they would be extra generous, I think was their exact words, or extra lenient. But I would always look to 84-35 because it's in the law, right? It's in the body of law. And if you meet that requirement, you call practitioner priority service with the power of attorney. You tell them, I think I qualify for RevProc 84-35 relief. They will ask you the questions, and pretty much they'll just do it over the phone, and you're done. You're free.
John, for those that can't get transcripts for their clients directly, what do you recommend? Is that have the client go on and do it themselves?
All right. So the key driver to that working, hopefully, is that your client has a cell phone in their name. And what you do is they can go to the IRS Get Transcript app, which still works, and they should be able to download their transcripts. If they don't have a cell phone in their name, they can still use Get Transcript, but the IRS is going to mail the transcripts to them. What we've done is we have them sit here in the office and do it with us, so that in theory they did it themselves. I didn't. What's that nasty warning you get in the IRS website that says, you're trespassing and this is the federal law, blah blah blah.
So somebody asked if they can bonus employees, including the 2% shareholders, to help bring the payroll up to the 75%. Excuse me. Yes, you can, because wages are wages, payroll is payroll, but there's the secondary FTE test that you have to qualify for as well. So it's not just pay 75%, it's 75% plus semi-complicated calculation of the number of FTEs at this point in time compared to FTEs at this point in time, plus some other essentials that go with it as well that are too complicated to go into now.
The big thing is if your head count is dropped, your maximum forgiveness is going to be less than 100%. So in general, all these questions about the dependents, if you were dependent on a return, you are not going to get a stimulus check. The brother-in-law that sleeps on the couch, your in-laws that live in the spare bedroom. However, there's a top-off provision. So if you file a 2020 tax return for these people, certainly they would get, if they got zero, they would probably get the $1,200 per person. So that's something to look forward to.
Martha's asking if we're going to have another update program next Friday.
The link now for Monday's webinar is now at the top.
I think the big thing is going to be if something changes, there'll be an update and it'll be Friday. If you're looking for rep updates, ASTPS is doing a great rep update, I guess, every Wednesday, but you have to be a member to watch it live. Otherwise, they're putting up a replay on Thursdays. No CE, though. They're not as generous as we are. But that material is out there, too. So, did we hit everybody?
I just want to know if guest 497 is Kevin.
Oh, yeah. Interesting, right? How somebody came in as a guest.
They say that they know your name, that John knows this person's name, and that John is always after this person to say their name in a webinar.
No, I'm usually making Kevin say my name in their webinars, but he won't. He refuses.
I don't want anybody to say my name in a webinar. My goodness. I'm looking to get Tony Nitty to do a webinar for us if anybody knows him. But other than that, Judy says, do I need to wait to charge a first-time abatement, or is there an address to send the request to now? There's nobody's open, so if it's an IRS issue, yeah, there's nothing you can do. And I'm thinking that all of this stuff, as much as you can do via phone, is what you got to do.
Okay.
I guess it is Kevin.
Yeah.
See, got it. I know things, and I drink. I hope I don't butcher the name. Rosal Carreras Mori. If the payroll forgiveness doesn't cover all of the loan, you can't use the rent. Now, what happens is you use the payroll to calculate what portion of that gets forgiven, and then you still can use 25% for rent, utilities, interests, and everything allowed for that other 25% portion. So if you may not get full payroll forgiveness, and you may not get full other forgiveness, but you can use payroll for 100%. So if, like in my case, if I do get a PPP loan, I have more employees now in 2020 than I did in 2019. So I theoretically can utilize all of that PPP loan for employee salaries, and I'm going to be above the FTE limits and everything else. So I should get full forgiveness that way.
Mark Enzi is asking how the IRS is going to do, how they're going to police this. Well, the answer is 6 months from now, you guys need to be ready. Right around the time we're trying to get extensions out for the people that still haven't sent us their stuff, the banks are going to start self-clearing these loans for forgiveness. There's going to be another application process where the issuing bank apparently is who is going to do the forgiveness. So they're going to look for a payment starting in month 7 unless you get in paperwork that shows, here's what I did with the money, and here's why I think it should be forgiven. And I guess there'll be a document issued. So since you have 10 weeks to spend the money, somewhere around month 3, somewhere around September, the banks are going to start asking for documentation for the forgiveness. So I don't think that it's ever going to really become a tax return issue, Mark. I think it's going to be a bank issue now. Now, the issue for me is when I do the tax return, I'm going to have this money come in that the client has coded to a non-taxable account or sits on the balance sheet as a loan, as a due to. At the end of the year, I'm going to have to make an M2 adjustment or an M1 adjustment somewhere, right, to make it go away. So as part of that, I want to see that paperwork from the bank. It's going to be, or the SBA. It's going to be very interesting what's going to happen here.
Donna, there will be no 1099-Cs for the forgiveness. That's not going to be taxable. What is up for debate, though, is whether the expenses that you paid for with those funds are still going to be allowed to be deducted. So, but there will not be 1099-Cs given for the amount forgiven. And
it's already been accepted. EXCEPTED, accept. My New York accent confuses people. There's accepted and accepted. So it's already been accepted from taxable income specifically. So it's going to be for some interesting accounting what you're going to do with that money. But Fred's right too. We believe you can take the deduction and double dip, but we don't have the information yet.
If you can't take the deduction, it basically makes it taxable.
Right.
Same thing.
Shelley, I think the confusion is that why we'll need the paperwork is I don't want to leave that loan on the balance sheet forever, right? If it's paid off, we're going to write it off. And if these are some pretty large numbers, my concern would be doing the return correctly. So I'd want, or accurately. So I'd want the letter showing that it was in fact forgiven. No, Jeff, forgiveness is not income. So the CARES Act specifically excludes forgiven payroll check protection amounts from being included in gross income under IRC 61A.
Chastity, on the partnership. So the 100K limit is per partner. It's per employee if you have employees receiving over 100,000, and it's the same thing. So if you have a partnership with 5 partners and the net, net income at the end of the day is 700,000, it's 100,000 per partner plus the benefits such as a retirement plan, healthcare goes on top of that $100,000. Okay. Do we have any questions that were not answered? Ellie, can a sole proprietor who applied for PPP also apply for and collect unemployment insurance?
I mean, until they get the PPP, that's fine.
Just don't lie, right?
Yeah.
So when you certify to your state, so the states are still evolving with how they're asking these questions of people who are self-employed. But at some point, one of the questions is going to be, did you get any other money from anybody else? Maybe they'll even say, did you get a PPP loan? And you're going to have to say, yes, I did. And like any other payment, you'll probably, if you have 8 weeks of PPP money, you're going to lose 8 weeks of unemployment. But so be it. Shelley, back to your comment about the expenses won't be deductible. We're not sure. Tony Nitty said, looking is at Section 215, I hate to be a code head, that talks about you can't take a deduction against tax-free income. That meaning like you can't use borrowed money to buy and deduct the interest when you bought tax-exempt bonds with it, right? That's the primary place you see it. It's not clear yet if that's going to apply. Logic says it should, but we're also in the middle of a pandemic and probably a recession bordering on the Great Depression, the Great Recession, and we want to keep money. We don't want to create more tax problems for people. So it's going to be very interesting where they go with this. And
the opposite argument when you're reading it is, it's a loan. These expenses are against a loan. All right. So in that reading, you could argue that, okay, I deducted these expense against the loan. That loan got forgiven later. So it's 2 separate timelines. We have to wait for guidance.
So we'll be doing more of these webinars in the future.
It seems that. And Diane, yes, you will be able to re-listen to this. John, I'm assuming he's going to post this up on the Tax Pro website.
This YouTube. So this will end up on YouTube by the end of the weekend. All right. Awesome. So if you need us, John at Tax Practice Pro, Fred at bqtaxpro.com. Ellie, where do we find you?
bqtaxpro.com.
Ellie at bqtaxpro.com. Got it. All right, everybody, stay safe, stay healthy. Happy to talk to you here from lockdown in the great state of New York.
Bye.
Bye.
Adios.